Good morning. This is George Tkachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. It's the first fun Monday of March, and let's talk about what's going on in the equity markets. The equity markets are still basically in a confirmed uptrend. Now, I know it sounds kind of funny saying that, considering the Dow's down about 150 points this morning, NASDAQ is down about 30 points, and the S&P is down about 15 points. And most of this is fed by the fear of what's going on around the world, namely Russia invading Ukraine. It's a very terrible thing. Russia showing its aggression towards Ukraine, and it's not the kind of thing you want to see happening. And of course, this uncertainty can disturb the equity markets. However, it is possible that the equity markets are looking past this. And the reason I say that, if we take a look at how the equity markets traded last week, a bit peculiar, meaning they rallied in the morning, sold off towards the end of the day, but pretty much came back to support level. And then on Friday afternoon, when news broke that Russian troops were in the Crimean region of Ukraine, the market sold off pretty hard, but they were able to bounce. In fact, the S&P closed at a new all-time high. We saw the Russell 2000 close at a new all-time high. We saw the NASDAQ closing at new highs. So that's not the signs of a weak market. That's, they're showing that there's some selling in the market, some fear, but the market still wants to hold up. Now also, home builders, which were a lagging group for the last quarter, started showing some life earlier this year. And again, if you look at the home builder ETF, XHB, that closed at a new high. You have financial stocks which were pretty much also lagging the market, not necessarily diverging away, just lagging the market. They also had a pretty good day with a few banks hitting new highs on Friday, banks like Signature Bank or Silicon Valley Bank. So that again shows you there's some strength in this market, and that's not the sign of a weak market. Furthermore, you had the advanced decline line hitting new highs. Again, a sign of a strong market. And on a daily basis, if you look at the number of stocks hitting new highs versus new lows, pretty much outpacing it about 15-1. So again, despite this market being at new highs, people calling for a top, we have this geopolitical crisis, the market's not giving up. So that's where you have to let price and volume be your guide. Now, of course, things may change this week. We have no way of knowing how things will escalate, or will cooler heads prevail. Will the European Union be able to talk to some sense into Vladimir Putin? Who really knows? So watch the indexes, watch your individual stocks. We'll see how this unfolds. But for now, the market's in an uptrend. No reason to hit the panic button just yet. You can pick up stocks as they pull back into support levels, or you can just wait to see how this whole thing plays out. So good luck trading. This is George Tkachuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago.